Hi, thanks for tuning in. This is US Futures weekly chart analysis for the week ending 16th of January 2026. The first chart is the US dollar index futures. They closed slightly higher this week. You can see that there was some testing for supply below the previous bar's close initially last week, and then a modest push higher in response and up to this intermediate level. It's the highs of the range, but it's still an intermediate level because you've got another high up here. So it's within the overall range. I expect there will be some supply in this level above. It'll be more difficult to push into it sustainably. So the market's really just floated up to the highs of the range here because that was relatively easy. The market's been trading within this zone for quite some time previously, and that's absorbed a great deal of the supply, the activity within that level. So the market was able to float up to that highs of the range level with relative ease. It'll be much more difficult to break out above that line and into the next level above. The increase in this market has put some of the other markets, especially the currencies, under a little pressure. It wasn't a big move this week, so there wasn't any serious pressure shown. But you'll notice as we move along that a number of the markets were just held back a little bit compared to what they may have done otherwise. This is the E-mini S&P. This is S&P 500 index futures. They're really going nowhere at the moment. We've had 7 weeks of sideways trading where the market's gone from this level to this level. Not much movement. Price is really struggling to accelerate higher. There's certainly no catalyst being shown for any push lower. And when there is a down bar like these, there's been support found almost immediately every time. But that being said, the market's really gone nowhere for 7 weeks. You've got a slight pressing nature to the upside, which is a feature of bullish absorption. There have been a couple of threatening down bars with no serious downside follow through in response. So we would really like to see some sort of more serious effort being shown. There's no impending weakness being shown, but there's no real intent being shown for a push higher. So the market's just grinding higher on a pretty shallow angle. Really not going anywhere at the moment. You would like to see a little bit more serious intent emerge, and perhaps as volumes normalise into next week, that may happen. We're still a little below the average, so activity is low. The last 4 weeks have been holiday affected, so that offers the opportunity for the market to really start to stretch a little. You may get a down bar first. The market often does that to wrong foot people. You may get something like this. Before you get any serious attempt to push higher. So just be aware of that. This is the US Treasury 10-year note futures, and they're trying to hold on at the lows of the range here. The market's threatening to break down, and it's trying to hold on to every level there possibly is below. They're certainly showing no great strength. I note that volume last week and this week were both above the average, and price is attempting to hold on. It does look weaker than stronger, but there's no ease of movement towards the downside, at least at this point in time. So there's a reluctance to move lower. We'll just have to keep monitoring this. There's no strength being shown, but there's not enough weakness in the market to really cause a breakdown. Copper price futures drew out supply again this week. Here's the highs of the range, and they are pretty strong highs, and they're going to take some effort to push through. You note last week price did move right up and was forced back down to close adjacent to the highs of this up bar. And after a week of consolidation within the range of that previous bar, this week a similar thing's happened. The market's made an attempt to move higher and been driven back down, and it's closed in the relative safety found below this breakout line here, which is the high of this bar. Volume was again above the average. There's pretty strong activity in this market, and you can see that there really is some pressing nature to the upside forming. When the market does pull back, the down bars are within the range of the previous bar, and there's no downside follow through in response, or at least there hasn't been so far. This market is stronger than weaker, there's no doubt. And the buyers are slowly absorbing their way higher, absorbing the supply from the sellers. And I expect the market will attempt to move higher next week and probably up to the highs of the range. Gold price futures. Gold price futures closed higher again this week. There was an attempt to challenge this breakout line this week. Here's that breakout line. You can see that volume increased up to the average. There was a push higher and supply has been drawn out. The supply drawn out has kept the spread narrow and has closed mid-bar and at the breakout level. So supply has been drawn out. You'll almost certainly see a test for supply in response. The narrower the spread, the stronger the market. The wider the spread, the more serious the supply drawn out appears to be. I would expect a narrow spread down bar, closing mid-bar, and if supply is found to be low, an attempt to push higher, and if supply is found to be ongoing and persistent, there may be further downside follow through in response. So there has been supply drawn out, no doubt. We'll just see how persistent and ongoing that supply is and how strong the underlying market is. When you see down bars like this, the depth and duration of the pullback will give you an insight into the underlying strength of the market. Obviously, the more brief and shallow the pullback, the stronger the market is. And the deeper it pushes down and the longer it takes to recover, the weaker the market is. So a brief and shallow pullback and then a response higher would suggest there is serious strength in the market. And that's kind of what I'm expecting. But it remains to be seen at this point in time. Silver price futures. Silver price futures continued to accelerate higher. Volume increased to very high levels. There's lots of activity in this market. Spread increased in response to the very high volume. There was supply drawn out of this market as well, with the close well off the week's high. But the fact that there was still a strong up bar in response and prices closed well above the breakout line would suggest that the buyers hold the upper hand above the sellers. You probably will get a brief and shallow test for supply in response within the range of this week's bar, or if the demand continues to easily outweigh the supply, price will continue to push higher. There will be some resistance found adjacent to the top half of this bar, so in this zone here. So the market will have to work a little bit harder to work through that level, because that's where supply has been drawn out this week. The market's certainly looking stronger than weaker, and you can see that there's a pressing nature towards the upside, and there has been for some time. light crude price futures. Light crude price futures attempted to push higher this week and was hit by some supply as the market challenged the next level higher. That's exactly what you would expect. This is a breakdown line and a pretty strong one at that. And there's almost always increased supply drawn out when a market challenges a breakdown line like that. The market's moved up, it's issued a challenge to this breakdown line, supply has been drawn out, and price has been pushed lower in response. In a really strong market, price will attempt to just push higher again within the range of this week's bar next week, kind of like that. In a weaker market, you'll see the market come back and consolidate in response, whether that's for the whole week or just for a few days next week, and then there'll be a response higher if the consolidation is successful and supply is found to be low. Into the currencies now, with the strength in the US dollar, most of the currencies were a little lower this week. This market pulled back. It could have pulled back a little more deeply, but it has attempted to find support at this intermediate level here. It hasn't pulled all the way back to the lows of the range. So this market is showing some resilience, or attempting to do so. Volumes remained below the average, about the same as last week, and the thrust lower below the previous bar's low is reduced considerably compared to the previous thrust lower. So there is an attempt to support the market and hold on to this level here. I'm not sure it's going to be successful. The US dollar does attempt to move higher into that more difficult zone above. This market will be forced to move lower, perhaps down to this dotted line. We'll see. The British pound, similar to the euro in a large degree, perhaps a little stronger than the euro, because this market still did close within the range of the previous down bar. It hasn't reached this level below, and it held on to the lows of the previous bar, which is actually a minor sign of strength. Similar to the euro though, if the US dollar does push higher and into that zone of resistance above, this market will be likely pushed into testing the strength of this line, or even perhaps down to there. But that remains to be seen at this point in time. I expect the US dollar will consolidate early next week, and it won't make any attempt to push into that zone above until later in the week. That'll give this market a little bit of a chance to recover up like this before there's pressure put into the market. That'll probably see this market closing somewhere in here anyway. This is the Japanese yen currency futures. They were threatening to break down last week. This is the breakdown line. The market threatened to break down last week. And this week, initially, it looked like it was going to break down and confirm the breakdown. But the position of the close this week, on an increase in volume and slightly above average volume, suggests there's an attempt to support the market. This isn't a clear breakdown. And there's going to be, it appears, an attempt to recover. I don't think it'll be successful, but there's likely to be an attempt to recover. I expect there'll be pretty strong resistance found at this breakdown line, and the market won't be able to sustain that, and it'll be forced back lower. But at this point in time, there's an attempt to support the market. We'll just have to see what comes of that. Aussie dollar currency futures traded within the range of the previous bar this week. It did close as a down bar, but only very slightly. And you'll note the last three closes are all right at this level, just a fraction below this line in the background. Price is doing a good job to hold on, trading within the range of this up bar and right up in the highs of its range in there. That's showing you there's underlying strength in the market, And it's also showing you the market would like to move higher if given the opportunity. That being said, if the US dollar continues to push higher, this market's likely to continue trading within this little range in here in a similar fashion that it has done already over the last 3 weeks. But this market would like to move higher if given the opportunity. If not, I think it's going to trade in this narrow range for the next little period of time. Bitcoin futures. Bitcoin futures moved higher this week. There was an attempt to break out above this zone where the market's been in consolidation mode for a while. There was some supply drawn out this week. You can see that with the close off the week's high. And that may see the market, at least initially next week, just come back and test for supply within this week's bars range. And then there'll be a response depending on how much supply is drawn out as price pulls back. If supply is found to be low, there may be a secondary attempt to push higher. And if supply continues to be drawn out, you'll likely see price pull back a little more deeply within this zone where the market's been consolidating over the last few weeks. You'll note that last week's bar did look like there was some weakness emerge, but the response this week suggests that last week's bar was an absorption bar. Price moved up, buying the offer, then faded lower, and this week price has just pushed up within the range of last week's bar, closing right at its high. So this was an absorption bar, and this was the response higher. And you may get that again following a test for supply. A push higher and then a fade lower in response. Markets can move in that sort of fashion and grind their way higher over time. Just back to the US dollar index futures quickly. You can see that the market did test for supply early in the week, below the previous bar's close. And then it responded higher to close at the highs of the intermediate range in here. I do expect there'll be increased resistance if there's a challenge to that level and an attempt to push into the zone above. The market does suggest that's what is planned. That's what it's intending to do. The way the market's traded this week, you may get an early test for supply within this week's range. And then if supply is found to be lower, a challenge to the intermediate highs of the range and an attempt to push into the zone above. It's looking a little stronger than weaker at this point in time. I expect that's what the intent is. Okay, thanks for your time. Back again next week. See ya.